Hi Digital Chiefs. Today I'm going to answer a question from the Sydney Startups Facebook group. So this is a great startup group, perhaps one of the best I've actually seen online. I've been a member since 2017 and I did a mini call out for investor questions when I was thinking about starting this channel. So I'm just reading off here. I'm a sole founder and have got a startup I've been building part-time for a while. I think it's got IPO Moonshot potential because we own some big top levels and generate about 100K visits a year. We've had double-digit million acquisition offers already that I've said no to. Our websites are blanked out. I'm a 3x multi-million plus entrepreneur who has built everything from the biggest apps in the country to property development companies. So I've got capital to fund it with, but I have no idea how to monetize or what the business model is or should even be. I'm not even sure what I should be spending money on exactly. I have often thought of raising money from someone who would know. But in the past, when I've done investor meetings, I receive a number of platitudes, like how I need to focus on one thing or need co-founders to already know what I'm trying to build. But the honest answer is I don't know with this one. So here's my jam. I've got what I think is an IPO level moonshot potential startup with solid traffic and a great brand. I'm self-funding probably forever. I just really have no idea what to do with it for this business or what the business is. What I would honestly love is for an investor to look at my background and these sites, recognize the potential, and then give me 500K and mentoring advice to explicitly go experiment and try 10 different things with it to look for a business model. And without needing to put in a ton of time to find and convince that investor and have unproductive meetings. How do I do that? This is what I would like advice on. Well, firstly, congratulations on building a fantastic business on your own. You've already exited a company, it sounds like, so well done. Not an easy feat for any entrepreneur. You're in a really unique position to be able to actually fund the business as well. Very few of us have those choices. Look, I'm going to start off with something that's going to be the funny part. Your last bit about you'd love to see investors see your potential, give you some quick cash. I'm just paraphrasing here so that you can experiment and without needing to spend a lot of time to go and find this particular investor and to convince them. Very, very funny, given that I think that's everybody's wish. We would love to have someone believe in us, see our potential, give us a little bit of cash to go off and experiment. Who would not love that? And then not even need to really report back, not really having to spend a lot of time building this relationship with an investor, having to convince them. Really not quite understanding the role of the investor here. And that's okay. I've actually been in a similar position where I was, like yourself, built a good significant real estate portfolio, self-funded my own business through to exit. So I do understand where you're coming from. However, venture investing is quite different from real estate investing. Real estate, you're really just waiting on cycles. There's not a lot of different business models around it. With venture capital investing and angel investing, it is a slightly different success rate as well. A couple of questions I have straight off: why you actually need 500K. It does actually sound like quite a large quantum of money, considering you've already got website traffic, got a brand. Usually at that particular stage of pre-seed to seed capital, you're looking at 20 to 250K at most. Typically 250K, you're already actually in revenue. I do feel like you're asking for a lot of capital. 500K, double what would be the upper end of 250K to work out a business model. That's quite a lot of money. I'm not sure how you arrived at that based on the fact that you want to run roughly 10 experiments. Works out to roughly 50K per business model. And so that sounds like a lot of money. And 10 business models, that's a lot of business models as well. If you've already been a successful entrepreneur and you've built a ton of apps, there really aren't that many business models, particularly as it is related to website traffic, I'm going to assume it's probably some sort of consumer model in there. There aren't really a lot of business models out there when it really comes down to it. And so having 500K to go out and experiment to find a business model is really quite expensive. You'd probably want to be narrowing that down quite a fair bit and not having to actually raise a ton of capital. That means your valuation is probably quite high as well. And so an investor needs to take that into account when they're actually parting with some cash and then wanting to actually see a return on that. So understanding some of this math is actually quite important. The other question I really want to point out that there's traffic and there's quality traffic. Because this particular entrepreneur doesn't actually know what their business model is already, well, how do you know the traffic is actually going to be valuable traffic? How is it actually traffic that you can monetize, you can create a business model from? So not knowing your business model means the traffic is not that relevant at the moment until you kind of work out, well, this is how I would monetize that particular traffic, and therefore it is actually really valuable traffic. It's quality traffic, it's engaged traffic, it is traffic that will actually pay for something. That's where your business model would come from. You do need to actually qualify the traffic. There's also traffic and then engagement. A lot of traffic that comes and then goes is not particularly useful. Obviously, traffic that spends a lot of time on the website, a lot easier to monetize. That's how I suppose the Facebooks and the Instagrams were able to raise a lot of capital without any actual revenue. They knew what their business model was, though. They were going to actually monetize the traffic. And so they were able to show engagement. I'm not saying that this particular entrepreneur has bad traffic. I just don't know the quality of that traffic, given that this particular business owner doesn't actually know what business model they're after. Now, looking at this particular entrepreneur's background, they've obviously already successfully exited a business. Typically with entrepreneurs who've already successfully exited a business, this entrepreneur reports 3x return. There should already be around capital. They should be around investors already. I know from my experience that if you've already exited a company successfully, word gets around, there's usually investors more willing to part with capital. Whether or not the quantum of 500K, again, I'd question just, the theory and the narrative around why do they need so much. But I would say this entrepreneur would actually have an easier time raising capital based on their background. I wouldn't say an easy time, but an easier time raising capital. So I do wonder why they're having challenges raising. Maybe they're stuck to raising the large amount of money and the valuation is skewed. It doesn't sound like they're full-time in the business, so there's a lot of risk tied to the quantum of money that they're asking for. It might have to do with the fact that this entrepreneur, it just doesn't sound like they quite understand the role of the investor. Misunderstanding that having an investor is actually more like a relationship and not a transaction. And this entrepreneur does sound like they're wanting to really treat it like a transaction. That's really the crux of what I'm hearing. And most investors are really just not going to be inclined with that sort of attitude. I think a lot of us are just not investors and don't quite understand the risks involved and the actual goal of the investor. They're not really putting themselves in the investor's shoes. That's where I think there's a disconnect with a lot of entrepreneurs being unable to raise capital. So with this particular entrepreneur, based on the feedback they've received from investors, i.e. finding a co-founder, having some sort of business model already, and actually just being full-time focused on the business, they're very basic requests from an investor for an investor to actually de-risk the money they're putting forward. When you take on investors, you take on external capital, you are responsible for that capital. Generally speaking, investors like entrepreneurs who have some sense of responsibility to deliver return to the capital. Yes, absolutely. We understand there's a massive amount of failure in venture capital. We know that, we understand that. However, we like to see entrepreneurs who actually understand it from the investor side of things, that their goal is to manage the risk to be able to eventually deliver a really large return. That comes with responsibility. It comes with accountability as well. Having entrepreneurs that understand this is important for the longer term relationship. Generally with an exit, I'd say 7 to 10 years really for most bigger exits. And so these are long-term relationships. And so if you're not really willing to invest the time to find the right investor and then really convince them, or in my opinion, just build the relationship, it's not really convincing. That is part of the package. You are going to have to invest the time to find the right investor, sit down with them, build that relationship, and then really maintain that relationship. More than likely, you're probably going to need multiple rounds of funding. You're going to need advice if you get a really great strategic investor. The idea that you really don't want to sit down and convince this investor is probably just not the right setup for external capital. Most venture investors want to actually be strategic investors. They want to be quote unquote smart money, and they want to be involved in the business to help it succeed. So to sum this all up, what would I do if I was this entrepreneur in his shoes? He's already said that he can self-fund the business for eternity, which again is a fantastic position to be in. I would say, look, if you don't have a business model yet, again, in my opinion, there aren't that many business models. Why not find an expert that is not an investor? Not all investors are savvy with business models, right? Some of them have made their capital in a multitude of ways. Some of them have just been really good savers, some really great real estate investments, right? And some of them have never built a business before, and certainly not a technology business. So I'm not sure why, if you're really looking for genuine advice on business models, do you need an investor? Can you not get an advisor, a business analyst, a CFO to really look at the business, pay them in equity, pay them a fee? It doesn't really matter, just to help you figure out the business model, or at least narrow it down where it's not 10 and you don't have to spend a lot of time testing and to validate a very basic business model, maybe three to five, at least less than half. Then that's very few experiments. Once you've got some revenue, then you can raise a larger amount of capital based on a larger valuation. That really makes things a little bit easier to justify the time it takes to actually raise the amount of capital that you're probably looking for. The other point I'd also make is that if you really do believe you've got a moonshot idea, why give up a proportion of the business until you've actually figured out a business model, particularly when you can actually self-fund it, right? If you really believe you've got a great moonshot idea, you've just got to figure out the business model, why not hold off on it? Because you can self-fund it. That means you get to keep a larger proportion of it and really just exhaust out a few experiments, figure out the business model, and then go out and raise a large amount of capital. And then you can retain more of the business if you truly believe you've got a moonshot idea. Would your advice be any different? If you're an existing investor, I'd love to hear your comments. If you've got a completely alternative way to look at this, feel free to leave your feedback below. I'd love to hear from you. If you're looking for fundraising tips, advice, tools, check out digitalchief.co. Signing off now. Thank you so much for joining me.